Hello guys and welcome to our channel. In the last few days we have seen how rapidly Bitcoin and many other cryptocurrencies have risen. The whole scene is in a mood of optimism again, and so are we. Today we are going to look at the 3 most important reasons why Bitcoin will break the $100,000 mark before the end of 2024. You can also find on the Forbes website an article about it. So I would say stay tuned and watch the video to the end. Let's start with the first and most important point, the Bitcoin halving. For all those who don't know what the Bitcoin halving is, briefly explained, Bitcoin halving is an event where the rewards for mining Bitcoin are halved every 4 years. This is done to control inflation and reduce the amount of new Bitcoins coming into circulation. Halving makes the supply more limited, which often leads to price increases. The next Bitcoin halving will take place next month. According to Binance, the next halving will take place in 22 days. Please note that you can find different countdowns on various pages on the internet. Predicting the precise date of the next Bitcoin halving is challenging because it's tied to the number of blocks mined. Halving events occur approximately every 210,000 blocks. Based on this, the next Bitcoin halving is expected when the block height reaches 840,000. So don't be surprised if the countdowns vary. In the past, we have seen very clearly that the Bitcoin price has always risen after halving. But halving will not change the price of Bitcoin overnight. It is even quite possible that the price of Bitcoin will fall in the short term on the day of the halving as a result of traders taking short-term profits. Historically, it has been the months following the halving that have seen large price increases. Here you can see a chart from Coin-Metrics which shows that the price has always risen rapidly after the halving. 1 year after the 2012 halving, the price has risen by 8,069%. Incredible, right? 1 year after the 2016 halving, the price has risen by 284%. And in the last halving, the price rose by a whopping 559%. But friends, it is important to note that past performance is no guarantee of future results, but historical data shows that halving the rewards for Bitcoin mining has traditionally had a positive impact on the price. Let's move on to the second reason why Bitcoin is likely to break the $100,000 mark in 2024. Less liquid assets. The availability of liquid Bitcoins on cryptocurrency exchanges is decreasing compared to previous bull markets, indicating a reduced supply of Bitcoins available for trading. Many Bitcoin holders are opting to hold onto their Bitcoins rather than selling or trading them. As a result, only a limited number of Bitcoins are available on the market, referred to as liquid. Recent data suggests that there are only 2 million Bitcoins considered as liquid. This reduction in the available supply of Bitcoins can amplify the impact of the halving. The halving reduces the number of newly mined Bitcoins entering the market, and in conjunction with the limited availability of liquid Bitcoins, this could create an intensified supply-demand imbalance. With fewer Bitcoins available, increased demand for the limited supply could lead to a rise in price. Consequently, this could contribute the Bitcoin price reaching the $100,000 mark before the end of 2024. Last but not least, Bitcoin Spot ETFs. The approval of Bitcoin ETFs by the US Securities and Exchange Commission (SEC) on January 11 is a crucial step towards Bitcoin reaching the $100,000 mark before the end of 2024. This green light from regulators not only paves the way for institutional investors to enter the Bitcoin market, but also simplifies access via regulated exchanges. There are several reasons why spot ETFs have a positive impact on the Bitcoin price. First, it will greatly improve accessibility for institutional investors. By offering a simplified way for large investors to purchase Bitcoin, spot ETFs can trigger a surge in demand. In addition, ETFs can significantly increase liquidity in the Bitcoin market. By allowing indirect investment in Bitcoin, they promote a more stable price environment which could curb volatility. Psychologically, the approval of Bitcoin spot ETFs also carries significant weight. The The SEC's approval has created more confidence among investors, increasing interest in Bitcoin as a viable asset class and potentially driving the price higher. Finally, the dynamics between supply and demand on the Bitcoin market could change significantly. As the supply of Bitcoin is inherently limited, increased demand from institutional investors may lead to a supply shortage and thus drive up prices. To summarize, the introduction of Bitcoin Spot ETFs have a profound impact on the price dynamics of Bitcoin. By improving institutional accessibility, increasing market liquidity, boosting investor confidence and reshaping the mechanisms between supply and demand, the impact could be significant in the near future. And from today's perspective, we can already say that the ETFs are doing very well and already breaking records. On March 12, for example, we already had inflows of $1 billion in one day from spot ETFs. BlackRock alone had $849 million. Such high inflows in just one day. That's incredible, isn't it? BlackRock also set a new record with its ETF alone, achieving more than $10 billion in assets in just 7 weeks. Never before has an ETF managed to do this so quickly. The Gold ETF had previously held this record, but the Gold ETF took 2 years to achieve this and BlackRock's ETF did it in just 7 weeks. So the Bitcoin ETF from BlackRock has broken the record of the Gold ETF in this case. Here we can also see which company holds how many Bitcoins. BlackRock leading with currently 252,000, followed by Fidelity with 144,700 Bitcoins, and in third place we see ARK with 44,620 Bitcoins. Okay folks, as you can see, there are very good reasons why it is not very unlikely that the price of Bitcoin will rise to over $100,000 this year. As mentioned at the beginning, the whole scene is very optimistic, just like us. But please friends, always do your own research before you invest in anything just because of FOMO. This video was not financial advice, but simply our own opinion.